position and buy some shares in Whole Foods. So today I just wanted to kind of walk you through kind of my thought process and how I came about coming to that investment decision. And for those of you who have followed my blogs or have followed some of our previous editions of Stock Talk, I've talked a little bit about a process or a framework that I work with when I work with people to help them make those investment decisions. And fundamentally, when you're looking at deciding whether to buy or sell a stock, it really comes down to answering 8 questions. I found that if you can answer these 8 questions, you have a pretty decent idea of whether you're going to buy or sell a stock. So I'm just going to basically share with you my analysis of Whole Foods through answering these 8 questions. So let's just jump right to it. Question 1, the first question I always ask is, what do they do? What does the company do? What do they sell? So what does Whole Foods do? Well, essentially, if you know what Whole Foods is, they're a grocery chain. They sell grocery, produce type products. The difference is, and their differentiation is that they are more catered to more higher quality types of products, fresher produce, more organically inclined type products. So when you go into a Whole Foods, it's not just about just going out to buy a dozen eggs. It's about buying organic type eggs or high quality grain fed eggs that are fed by chickens that were laid eggs by chickens that were eating nothing but natural type foods. So that's their key. That's one of their key value propositions. And one of the building on that, it's all about providing their customers with an experience, but getting customers to get more personal with their foods. And it's not just about selling them a head of lettuce. It's telling them a story about that lettuce, where the lettuce came from, who the farmer was, what they're all about, what their philosophies are towards food and such. So it's creating a much more personal experience for people to have with their food and what they're consuming. That's the Whole Foods type of gig. Question 2, who do they compete with? Well, one of the unique features about Whole Foods and why it's been such a popular stock over the years is that they've essentially owned the whole upper end grocery kind of market. And especially in terms of organic foods and higher quality type foods, they've really differentiated themselves quite effectively. And of course, when you are deemed to be the leader in a certain area, you're going to have competitors. And so over the years, recently, we've seen entrance into that high-end food space through people like Walmart, Costco, Target, have been introducing more health conscious type foods and more organic kinds of foods, and it's had an impact, and it's eaten away into their market share. And the stock has taken, and it's a big reason why the stock has fallen back over the last while. Grocery chains, the traditional grocery market, retailing market, very low margin. It's all about volume, low margin, and so it's an ultra competitive kind of marketplace. So there's enough competition to go around. Question 3, who buys their products? Like, who goes into a Whole Foods? Well, it tends to be upper income, more predominantly higher, well-to-do people, more people who are more food conscious, the more foodie kind of crowd, people that kind of eat to live to eat, I guess, or instead of eat to live, more health conscious, and that's their main kind of group. And one of the natures and people why Whole Foods kind of has a love-hate kind of relationship is because of the price points. Their food is their produce and products are much higher than typical other chains, like going into Walmart or a Target or a Costco. Their products are much more higher expense, and so a lot of people complain about Whole Foods kind of basically catering to that that whole 1% kind of thing, and not really catering to the masses. So traditionally they've been going out after the high-end market, high-end demographic, but over the last year they've announced a bit of a strategic shift in that they're opening a new type of store called the Whole Foods 365, which is going after the more millennial crowd who obviously may not have that income to spend on their traditional stores, but are still seeking high-quality food and are very health conscious, and so they're trying to basically go down market a little bit and try to offer a little bit more of a value proposition to that segment. And so they've just opened up the first store, and they're looking to open up a bunch of stores in the next year. And so it's a big kind of game changer, potential game changer moment for the company. And I'll talk a little bit about that in terms of how it could affect their existing clientele. Question 4, will their customers come back again and buy their products? Well, one thing that Whole Foods has developed is quite a bit of brand loyalty. People that shop at Whole Foods are very loyal to the store, to the brands, and it's all about, again, part of the whole marketing and part of the whole image that they've projected is this community aspect of it, really getting into the community and getting people more feeling like I have a community kind of feel to the store, and having a relationship with the people that work there. And so it's built quite a bit of brand loyalty, and there's vigorous defenders of the whole Whole Foods experience on that side of it. So the question is, will people come by to buy their products? Yeah, that seems to be the case. Question 5, and one of the most fundamental questions: do they make money? Does Whole Foods make money? Well, if you look at their earnings from an economic profit perspective, which is what we focus on, if you look at their returns on invested capital over the last 3 years, they've come in between 25 and 27%, which is, for a retail grocery kind of chain, is amazing. If you compare that to the company's cost of capital, which is about 11%. So this company is creating really significant economic profit, really significant tangible wealth. And this is despite the fact that over the last few years, they've been losing market share. And even, sales have been kind of flat and still, but they're still generating high returns on their invested capital, which is ultimately, as an investor, that's what you're looking for, is this company creating tangible wealth? From that perspective, Whole Foods is doing very well in that side of it. Question 6, does the company, where do they raise their money and who do they owe it to? That's the question we ask. And really, it's all about looking at the quality of the company's balance sheet. If you look at their balance sheet, they have hardly any debt, and they have minimal goodwill or intangible assets. And so it's a very solid, very clean balance sheet, and in a way, it's made Whole Foods there's been a lot of rumors over the years, and there was one actually last week about a potential private equity company coming in and buying out the company. Because it's a company with such a strong, clean balance sheet, it's really like red meat to a lot of private equity takeout kind of companies, takeout artists. So there's a lot of rumors over the years about Whole Foods getting bought out, and kind of like an LBO kind of situation, because of just the way it's structured and just because of the enriched cash flow that this company has. Companies salivate over the prospect of taking over it. Question 7, risks. Are there any risks facing the business? Well, the fact of the matter is, the grocery business, as I said, is low margin. It's very much volume driven, and Whole Foods has really differentiated itself away from that by selling higher margin foods, and has been able to kind of get away with it. And so, as people have been seeing that their market share has been slipping to other competitors, people are wondering if Whole Foods potentially could become sort of fall in line with the other grocery chains and become more focused on the low margin side of it. And obviously that'll have an impact on profits and ultimately an impact on the stock prices. It's possible, and I think the big thing is this 365 store model is going to be a big challenge, because the fact of the matter is they're trying to offer a differentiated product to a different crowd at a lower price point, which eventually is going to impact margins. But on the flip side, if they do go down market, the risk is, are they going to offend their existing customer, who I said were very loyal, very loyal to the company, and have a lot of, really relate well to the brand and to that image. Is that brand going to get diluted if they go down market? History has shown that luxury kind of retailers that kind of get away and kind of go more mainstream tend to really have a hard time, really damage the brand and have a hard time recovering from it if it's not done properly. And the other risk is that, ultimately the risk is, will the 365 stores kind of cannibalize the profits from their existing high margin stores? That's the real debate, and that's why people are a little bit down on the stock, because they think it's going to happen that way. That's how it's going to shake out. So when we get to question 8, is the stock cheap? Well, right now we bought in at $29. From valuations that I've seen out there, the stock is valued you can find it between $36 and $45. So there's at least 20% upside right now from where it is right now. So in that perspective, it's trading from a discounted cash flow perspective, it's trading at a discount. So when you factor all these elements in together, strong returns on invested capital, strong economic profit. It's still, despite the fact it's lost market share, it's considered still the dominant best of breed upper level food retailer in the country, and in North America. It's still got a very solid management team that is very, very committed to the brand. It's not just a bunch of fly-by people looking to flip the company type thing. It doesn't seem like that. The original owners and founders of the company are still there, and they still have a very presence in the running of the operations. And they're very out of the box thinkers. They're not your traditional, corporate-y kind of, well, they are corporate-y, who isn't, but they really like to push the envelope in how they present their products to their customers from that sense. So their competency level is still pretty high. At the end of the day, it comes down to, is this 365 store going to make or break the business model, and force them to go down market and cannibalize profits from their existing stores. The reality is, like, if you look at other grocery chains, they all have different kinds of store models or store products. Like, up here in Canada, they have the Loblaws chain, and you have like your discounted stores. You have your Great Canadian Superstore. You have your T&T type store that they bought recently, and I think it's possible, if you look at other companies, other similar grocery companies, they've been able to compartmentalize different business models and offer them out to appeal to different demographics and different market sizes. So looking the way at Whole Foods has expanded also, they're very meticulous and very strategic about where they expand and put their stores. They've very much resisted the Wall Street pressure that they have to grow at a certain ridiculous level, like 20, 30, multiple, hyper growth kind of thing. They've kind of said, what we'll grow and we'll do our thing according to what makes sense for the company. They don't seem to be very focused quarter to quarter kind of thing, which is great. They're long-term strategic thinkers, which is, as an investor, that's what you want. So I think from that, when I take all these elements and put them together, it's a really well-run, well-managed company creating tangible profits, got a really clean balance sheet, stock selling at a discount, despite the fact that it's losing market share, and it's despite the fact that it's out of favor by the analysts and by the investment community, it's still making money. And as long as you're making money and making tangible wealth, you're going to be all right. You're going to be around, and you take that with a competent, forward-thinking kind of business management team. There's a shot there. You got a shot, and I don't think it may not work out. The 365 model may not work out. Nobody knows. You don't know until you do it. But when you put all these elements together, it seems like a reasonable premise to make an investment decision to buy some stock. And so what I did was I've had it on my buy list for the last about 6 months, and my thesis was really, if the stock went down to like under 30 bucks, I would buy it, and it did. Just last week, and I coupled with the fact that the Canadian dollar has been kind of appreciating big time against the US dollar. It's gone from 146 to 126. It was almost like another 15% discount on the stock. So I put those elements together and I said, okay, I'm going to open up a position. And so I bought a small position at about $29.62. And the plan is, if the stock keeps going down, falling down from here, then I'm pretty comfortable in buying more stock, assuming the fundamentals of the business again stay consistent. I have no problem buying more and averaging down from that perspective. So to me,